Wellpoint, one of the two largest healthcare insurance companies in the country, has done something. I don't know if I want to call it funny. I don't want to, whether it's sad, ironic. You know what they're doing? They're cutting their health insurance coverage for their employees. No, don't worry. The private corporations, they'll take care of you. Now, look, they're not cutting it entirely. Let's be fair. Okay. First of all, they just fired 1,500 employees because they say they're in bad economic situation. I'm going to tell you about their economic situation in a second, and then you'll see whether that's true or not true, right? They fired 1,500 employees, and for the remaining employees, and they have 42,000 employees overall, they are making them pay higher deductibles and higher premiums and reducing their coverage. Now, again, to be fair, Wellpoint started with a plan that was above the national average in what they offered in healthcare coverage for their employees. They're looking to amend that right away. Let's get below that national average. Who are we kidding, right? So now they're going to have to pay more deductibles and premiums, et cetera, et cetera. So now you must be thinking, well, what can you do? It happens sometimes. So that's what I think. It's capitalism, and sometimes if in a recession like this, people can't afford as much insurance. Companies can't afford as much insurance. So it's tough times, and sometimes you got to cut back. That's interesting because it looks like their CEO in 2008, when we were having those tough times, made $9.8 million. What happened to cutting her salary back? Oh, no, of course not. No, Angela Bray, is it Braley? Yes, Angela Braley had to make nearly $10 million. I mean, we're not going to cut that back. Are you kidding me? No, we're going to cut your health care coverage back when we're a healthcare insurance company. So, but you must be thinking, no, come on now, they must not have made a profit, and they're in trouble. Now you might question how they spend their money, but Cenk, don't tell me they made a profit. Well, of course, last year they made a net profit of $2.5 billion. No, they're suffering. You don't understand how they're suffering. In fact, they're suing the state of Maine. I love this part because they were going to increase premiums 18.5% for their policyholders in Maine. And Maine said, whoa, that's an enormous increase, right? I mean, they just keep piling it on, right? They say, no, you don't understand. We should be guaranteed profits in the state of Maine. Everywhere we operate, we should be guaranteed profits. And if we raise it this much, then we only make a 3% profit. Number one, I don't believe that. Okay. But number two, where in the United States Constitution does it say you're guaranteed profits? I thought we were in a capitalist country. This seems to be, as Dylan Ratigan has called it, corporate communism. No! The corporation must make money. Okay, government, make it so. So now they're suing the state of Maine to ensure their guaranteed profit. By the way, you want to know one other thing they spent money on last year? Lobbying. That's funny. You know how much? $9.5 million. And I'm surprised it's that low. So I'm sorry, I don't have money for your health care coverage. I had to spend it all on lobbying to make sure no one else gets health care coverage. Look, here's all I'm asking for. Now, I'm asking for other things in other areas. But if you're going to do this, doesn't it make sense to say, hey, you know what? We're in tough times, and we're going to prove it to you by cutting back on our CEO salary. Yes, we're going to cut your coverage because we don't have a choice, but we're also going to cut our CEO's compensation because apparently she's not doing the job. Apparently she sucks at her job, right? So we're going to cut her pay, well, I don't know, maybe in half. Oh my God, she'll lose $5 million. She'd still be making $5 million. Now the reason they're not going to do that is because they're actually not doing badly. Like I told you, they made $2.5 billion last year. And she hired the board. You think they're going to cut her pay? Hell no. They're going to cut the employee coverage and pay and fire people 10 times, 100 times before they touch the CEO pay. So next time your company tells you, hey, no, we had to do this because of tough times, just ask them a simple question. Did you cut the CEO salary? Now, sometimes they're clever enough to do that, and the CEOs still get paid a lot of money. But 9 out of 10 times, the answer is given to you by our old friend Ed Reed. Hell no! They didn't cut the CEO salary. They're not in that kind of tough times.